you're looking towards the earnings call, it sounds like, more than the actual results, because you want more information about the company's AI efforts and that robo-taxi.
That's right, Frank. And it's interesting. It's the number 2 or the second worst stock in the S&P 500, but Tesla is the number 1 most hated stock on the street. And I love hated stocks. And it's not a contrarian play here. To your point, I believe it's the purest AI play out there. But what's fascinating today is that we will see Elon Musk's feet held to the fire. We want to know about this Model 2. That was the $25,000 car that they were creating and supposed to be rolled out in January. In the event that Reuters rumor, which he did, by the way, deny, that was a rumor, if the Reuters rumor is correct that they are scrapping the Model 2, that will really stop giving people will stop giving Elon the benefit of the doubt. He's been given the benefit of the doubt on so many different fronts, but if they scrap the Model 2, that will be considerable damage to his reputation and how they move forward. But I do believe in Elon, I do believe in the Tesla, and I think the stock has the ability to move about 23% higher back to its 50-day moving average at 177. So I think there's a ton of opportunity here in the stock price, just like when it was on discount sale back in January of 2023.
All right, Jeff, you're hitting us with quite a bit. So first, I want to start off with one of the things you said. You called it one of the most hated stocks on Wall Street. I think you got that from the CNBC stock screener, where you can find the RSI is at 27, showing extremely oversold conditions. I know that's what you meant to reference. But I want to come back to what you said, the Model 2. There was a lot of hype around the Model 2 being, a lower cost option than some of the other EVs. But isn't the thought from a lot of reports is that the Model 2 was scrapped for the robo-taxi? I mean, in your mind, aren't you happier about the robo-taxi than the Model 2?
Well, I think we always knew about the robo-taxi. So short term, to really find a catalyst to have this stock resume, or I should say to stop its free fall, what it's been in, I think the Model 2 is the paramount issue. The robo-taxi, we always knew that they've been collecting and gathering all this data, and they can flip a switch.
All right. So I want to go to some news from this week. Elon Musk deciding to postpone. Some people call it blowing off, but postpone his trip to India. Do you think that's a big deal or not a big deal? We had an analyst on yesterday that said Elon Musk really needs to have himself in India to grow not only his customer base, but his supply chain.
I actually think it's a big deal, but the lens I'm looking through, I think it's a big deal that for the first time in quite some time, he's prioritizing Tesla. And I think it's a focus that he had some obligations he stated short term. He's got a lot going on in the company. They just laid off 10% of the workforce, and I think they're really focused short term to stem the bleeding that's been going on in the stock price. So I think it was a great decision for him to prioritize and stay here and try and get his house in order.
All right, let's get a little bit technical right now. You're saying with Tesla under 150, right now it's trading at basically 143. This is an attractive entry level. So why is this an attractive entry level after a pretty steep slide? We're looking at the charts right now, down more than 40% year to date. Why is under 150 an attractive level when it's under pressure due to China competition, lower deliveries, and price cuts?
Well, I think you have to look at the drawdown going back all the way to the IPO. And if you look on a 5-year metric, Frank, the stock is still up over 700%. But short term, to your point, this type of drawdown, I think there's an opportunity to sell puts. We love using options to define our risk here. But I've been long since last January 23, and I've been adding to the position up at 185. Here at 142, it offers the opportunity, as it's been overextended, to your point, the relative strength index, which is a great measurement of understanding not just from a quantitative perspective, but it's also sentiment. So when you see the stock oversold, there's an opportunity here. 23% higher is the 50-day moving average. The 200-day moving average is back above $200. So I see the stock potentially by the end of the year getting back to that $225 level. That's a lofty goal, but I think it's very, very plausible.